Three money changes are hitting this July, and if you miss them, they could cost you thousands of dollars.
One involves an IRS deadline they don't send reminders for. Another involves Medicare information, a penalty that was recently reduced, but it's still catching more seniors than almost anything else. Here are the three changes you need to know.
July is a weird month for retirement money. It's not tax season. It's not Medicare open enrollment. Most people coast through July assuming nothing's happening with their money. But July is actually one of the most important months of the year because three separate deadlines, data releases, and checkpoints happen in these 31 days that directly affect your Social Security, your Medicare, and your retirement accounts. Miss them and you'll overpay. Hit them and you'll save thousands. And here's the catch. No agency, no insurance company, no bank will ever send you a letter saying this July deadline matters to you. Today, I'm walking through all three, in the order you should act on them. Each one has a specific date, a specific form, and a specific dollar amount attached. Let's start with the one that's easiest to miss. July 15th, estimated tax deadline. Circle that date on your calendar right now. If you took money out of a retirement account this year, an IRA withdrawal, a Roth conversion, a required minimum distribution, or if you sold a property or had capital gains of any kind, you likely owe estimated taxes. And July 15th is the deadline for your Q2 payment. Here's why this matters to seniors specifically. Most retirees are used to having taxes withheld from a paycheck. That stops when you retire. So when you pull money from a traditional IRA or a 401k, the IRS expects you to pay taxes on that income quarterly, April 15th, June 15th, September 15th, and January 15th. July 15th covers the second quarter, April, May, and June. If you did a Roth conversion earlier this year, that's taxable income. If you sold stock or real estate, that's a capital gain. If you have rental income or a pension without withholding, you owe a payment. And if you miss it, the IRS charges an underpayment penalty. It's calculated on Form 2210, and it's not a flat fee. It's a percentage of what you underpaid, calculated from the due date until you actually pay. For someone who owes $5,000 and pays 3 months late, that's roughly $150 to $250 in penalties. How to fix it? Go to irs.gov and search for Form 1040-ES. There's a worksheet that tells you exactly how much to pay. You can pay online through IRS Direct Pay. It takes 5 minutes. Or if you have a CPA, call them today and ask, do I need to make a July 15th estimated payment? The deadline is firm. The only exception is if your income is seasonal or if you had a major life change. Otherwise, pay by July 15th. Change number 2, the July Medicare data release. July is the 1 month when Medicare publishes its complete plan data for the following year. Every single Part D drug plan and Medicare Advantage plan for the next calendar year gets loaded into the Medicare Plan Finder by mid-July. Here's why that matters to you. Between July and mid-October, you have a window where you can preview next year's plans, compare premiums, check drug formularies, see if your doctors are still in network, before the chaos of annual enrollment period starts in October. Most people wait until December. They panic browse. They pick a plan in 20 minutes based on premium alone, and they miss the plan that actually covers their medications or includes their specialist. If you take any prescription medication at all, even one, the plan you're on today may not cover it next year. Drug formularies change every year. Insurers drop drugs, move them to higher tiers, or add prior authorization requirements. If you don't check in July, you won't know until October or November when enrollment is already open and everyone's calling the helpline. I sat with a client a few years ago who was paying $380 a month for a brand name blood thinner. I checked the July data, found a different Part D plan that covered the exact same drug for $47 a month. Same drug, same dosage. Her previous plan had quietly moved it to a higher tier. She would have paid $4,000 more that year if she hadn't checked in July. How to fix it? Go to Medicare.gov and click Find a Medicare Plan. You can browse 2027 plans starting in mid-July. You don't need to enroll yet. Enrollment doesn't open until October 15th. But you need to see what changed. Write down your current drugs. Search each plan. If a plan you're considering isn't available in 2027, you now have 3 months to find a replacement without rushing. Also check the Star Ratings tab. Plans with 5 stars are available anytime during the year under a special enrollment rule, and July is when those ratings are released. Change number 3, the mid-year RMD check. This one has no deadline in July, but July is the single best month to do it. By July 1st, you have lived through exactly half of the year. And if you're 73 or older, or if you turned 73 this year, the IRS requires you to take a required minimum distribution from your traditional IRAs and 401ks by December 31st. If you miss it, the penalty is 25% of the amount you should have withdrawn. That's $2,500 on a $10,000 RMD. Gone. Here's why July matters. Most people do their RMD in December. They wait until the last month, sometimes the last week, and that creates 2 problems. First, if the market drops in the second half of the year and you're forced to sell in December, you lock in those losses. You're selling at the bottom because you have a deadline. Second, if you somehow forget, and thousands of people do every year, December is too late to fix it. You can't retroactively take an RMD in January. The penalty is permanent. The fix is simple. Take your RMD in July, or take half in July and half in December. Spreading it out reduces your market timing risk and gives you a buffer if something goes wrong with the transfer. The Secure Act 2.0 actually reduced the penalty from 50% down to 25%, but it also created a loophole. If you take the missed RMD quickly and file Form 5329, the IRS can reduce the penalty further to 10%, but that still means you lost 10% of your retirement money to a paperwork error. How to fix it? Log into your IRA account right now. Go to the Required Distributions section. If you don't see it, call the customer service number and ask, "What is my 2026 RMD amount and have I taken any of it yet?" If the answer is 0, take your first half today by doing a direct transfer to your checking account. If you want to avoid the tax bill, have them withhold taxes directly. That counts towards your RMD. One more thing. If you have multiple IRAs, you can take the total RMD from just one account. You don't have to take a distribution from each one. The IRS allows you to aggregate them, as long as the total across all accounts meets the minimum. That's useful if you have a small IRA you don't want to drain. Real story. A couple, let's call them Frank and Diane, came in last November in a panic, both in their late 70s. Frank had done a Roth conversion in January, a big one, about $80,000. He knew the tax would be due, but assumed his CPA would handle it. Diane had a small inherited IRA from her mother that she had never touched. She thought inherited IRAs didn't have RMDs, and neither of them had checked their Medicare Part D plans since 2022. Between July and December that year, 3 things happened. Frank missed the April estimated tax deadline. The CPA caught the June deadline, but Frank had to scramble for cash. Diane's inherited IRA RMD went untaken for the 2nd year in a row, which triggered a penalty on top of a penalty. And their Medicare plan had dropped Diane's blood pressure medication from the preferred tier. She had been paying $180 a month since January without knowing a $15 option existed. The total cost of those 3 misses was roughly $4,700 in penalties and overpayments for 1 year, and none of it would have happened if they'd spent 30 minutes in July making 3 moves. Frank could have paid his estimated paddeds by July 15th. Logged on to IRS Direct Pay, 5 minutes. Diane could have checked her RMD status in July, 1 call to her IRA custodian, 10 minutes. And both of them could have checked the July Medicare data release for 2027, typed in their drugs on Medicare.gov, 15 minutes. Instead, they waited, and the system charged them for waiting. That's the pattern I see over and over. Not bad planning, not bad intentions, just not knowing that July is the trigger month. Nobody sends a letter, no reminder email goes out, but the deadlines and data releases are real, and they don't wait. Let me give you the 3 actions to take this month. 1. July 15th. Check if you owe an estimated tax payment. Go to irs.gov, search Form 1040-ES, or call your CPA. Pay online through IRS Direct Pay. 5 minutes. 2. Mid-July, go to medicare.gov, click Find a Medicare Plan, enter your current drugs, see if they're still covered in 2027. If not, you now have 3 months to research your replacement. 15 minutes. 3. Right now, call your IRA custodian. Ask for your 2026 RMD amount. If you haven't taken any, take half today. It spreads your risk and eliminates the panic in December. 10 minutes. 3 actions, under 30 minutes total, and collectively they can save you thousands in penalties, overpayments, and missed opportunities. The reason these 3 changes exist in July is not a coincidence. The tax system, the Medicare system, and the retirement account system all have July checkpoints built in. They're just not advertised. You have to know they exist to use them. Now you know. Subscribe if you want the next one. Every week I break down a retirement money secret that nobody tells you about.